Good afternoon, traders. It's Samurai Trader here. Welcome to a recap of today's trades on the ES 144 tick. Now we've got the after hours market. This is the Sunday open in the USA, and it's Monday afternoon here in Australia. The market opens at 9 a.m. Queensland time in Australia, 10 a.m. In Sydney. And I just thought it'd be great to give a recap. We've just been doing a live training session, and we've been marking these trades up as the market's been developing, so I thought it'd be a great recap. I think I read something on the weekend which I wrote down, which I thought was fantastic, and most of you have probably seen the movie The Matrix. One of the main characters said to Neo, I'm trying to free your mind, Neo, but I can only show you the door. You're the one that has to walk through it. And I thought that's just so applicable to many of my students and to many traders, and this has been even applicable to me in learning to trust the trend and trade with the trend. Remember, the trend is our friend, and if you truly want to succeed, and I know I talk about this every training session because I deal with so many traders that are really struggling or that have failed and trying to come back, is they continually counter trend trade when they are not taking the trend trades as well. In other words, counter trend trading is fine if you have a skill set, but as I always say, master one setup, become a specialist. So let's have a look at our first setup of the day that we qualified as a setup. Well, what we've got here is a T2 setup, and we can see here where our stochastic is fully oversold, our long term. The short term kicks up, rolls over, and here it is here, and we're in. Now that delivered a good 8+ ticks, a good $100 per contract here. As most of you know, my target on the day market here is between 6 and 8 ticks. It depends on my stop, so usually I'm after 6 ticks. We had a very nice trade delivery here, and down here I marked this one up for the experienced divergence traders. What we've got here is what we call a T19A and also a T89 setup, which really double qualifies this trade. What qualifies this one? Well, what we've got is a higher low on our platinum. We can see it here, but I also have, you can see my channel, you can see the blue line is my trigger line, and we can see the big gap away. So we've got a lower low on the price action, a higher high on our indicator here, and our entry technically speaking is outside the channel. Now you would not have entered if you're playing it safe till this candle. Why? Because remember, we always wait for the zero lag, or I recommend you wait for zero lag to turn up, and we can see it turning up here and turn magenta, sorry, it turned cyan I should say, right here. And that was a really nice 8 tick plus trade. Now let's go to our next trade here. What we had here was a T1. Now a T1 we can see distinguished by the white paint bar. Now remember, that paint bar would not have plotted until we had a tick below that candle, which was here. So I always mark it up straight after, but it was here was your entry, and that was a really nice 8 tick move as well, waiting for, of course, the zero lag, which had already qualified here, to turn to magenta. Now what I've got here on this particular trade, I've marked it up, is a pivot bounce. We can see here we've got a higher low. Now see the white paint bar here, we've got it here. Once again, experienced traders only, please. The newer traders, stay with here. We want to be staying with our cyan line, which is the 89 EMA. Now notice the 89 is heading down, but for our pivot traders, we can see we had a nice pivot bounce. It was good for 8 ticks. Experienced traders, to discount that one and that one, so you've had 1 trend trade, 2 trend trades, and you're about to have a third one, which is a nice 8 tick winner again. Now this is an 89 EMA bounce. As we know, we love the 89 bounces. That almost qualified as a bounce. We've got a lovely bounce here, good for 8 ticks. Remember, you wouldn't have entered till this candle here, till we qualified, and we also had a double top, which we call T7s. We have a number of codes just to make it simple when we're doing our training. We call that a T7. So we had a double top. Our 89 EMA is trending down, so we're trading with the trend. We come down here, and then we had another paint bar here, but we also had a T2. Now notice here that our long-term stochastic is heading down. Now it's not the ideal T2, and the reason being, there's actually a couple of reasons. Number one, we're right at a pivot. Now here we could bounce. So what I've got here is T2 then a T1. So we can see here our short-term stochastic has gone right up, rolled over just there. That qualifies it, ignore the paint bar for a moment, that qualifies it as a T2. However, if you follow the rules in what I recommend in waiting for the zero lag, your entry was not till over here. Now this is going to save you many trades if you always wait for the zero lag. Now in the meantime, when this candle formed here, we also had a T1 form here, and we can see we rolled over. So that was a lovely trend trade. It was almost an 89 bounce. It was a T2 technically and a T1, so a double qualification to the short side. Now we've had 1, 2, 3, 4 trend trades. You're finished for the day. If your target was $200 per contract, you've packed up your bags and gone home, because 6 ticks on the ES is 75 gross, less your brokerage of $5. You just made $70 per trade. Now here's what tends to happen. Now we're live here in the market right now, by the way. Here's what tends to happen with the ES, the after hours market. The later the hours in the US, more traders that trade the after hours market have gone to bed, have retired for the night. So what we end up with is later, or in Monday afternoon, very early in the morning in Europe, the volume tends to dry right up until Europe opens at around 5 p.m. Australian time. So now's the time to start to be very cautious. But anyway, we've also had another couple of trades set up since then, which I'll show you, since that one there. I've marked this up anyway, a T2, and the reason I marked that up is that it totally qualifies. We're oversold. You may notice that the Stoke is starting to, the long-term stochastic starting to trend up, but you at the time, you actually, is very hard to tell that at the time. So we marked it up, but the reason that did not qualify as a trade is why is that? Well, what we can see here, of course, is that our zero lag is still cyan. It has not rolled over. Now it started to roll over here, but what happened? Well, we can see very clearly now that our long-term stochastic is trending up, and we had a T10, which is a money on the floor trade. So what is a money on the floor trade? A money on the floor trade is where we have the long-term stochastic start to turn up, it starts to run up, and our short-term comes down and kicks back up again. And that's what we call, it's really a higher low. So we can see we've come down, even though I don't have a paint bar. I'd love to see a paint bar here. I actually call them T11s then, but anyway, so we can see here we've got a higher low. Our long-term stochastic is up. These are a great trade to take. So the T2 did not qualify, and you can see over here you easily had your 8 ticks. So remember when I said a couple of minutes ago, wait for your zero lag? Well, by waiting for the zero lag here, that just saved you a losing trade. Now let me just quickly pull up a PowerPoint here, traders, and let me, we just got a couple of minutes. What I am going to be doing is, and if you haven't subscribed to my YouTube channel, please do subscribe, because what I'm going to be doing over the next week or so is starting to put up and do a commentary and a complete training session on each of my 13 core day trading strategies, free. So when I'm quoting these codes, you're going to be able to subscribe to my channel and obtain all of these free. Now we've got other training organizations are selling these setups for thousands, some many thousands of dollars, but I'm going to train you in all of these free of charge. So we got the T1, the super scalper, the T2, the T6. Now by the way, sometimes you'll have 2 or 3 of these will qualify together, and you'll discover why. So we've got a whole range of different setups. There's 13 I'm going to train you in. However, just in the last couple of minutes, I want to talk to you very quickly about something called ego depletion. If you've watched most of my videos, you'll hear me talk about master one setup. Keep your chart as clean as possible. Now, I have a lot of things on my charts. I teach you, when I do my coaching one-on-one, I teach the traders what indicators they really need, and we can strip a lot of that off the chart. You don't need all of the indicators I've got up. But anyway, ego depletion, what it really comes down, it refers to the idea of self-control or willpower drawn upon a limited pool of mental resources that can be used up. What that means is the more decisions you have to make, the more likely you are to make a mistake. So what it really means here is that you need to or let me put it this way, less is best. That's a better way of putting it. The less decisions that you have to make as you're trading, the better. So I'm going to train you completely in 13 different strategies. However, in some ways it's dangerous in me doing this, because what I don't want you to do is to try to apply them all until you've mastered one, and master the second one, and master the third. So in the end, as you look at these trading strategies I'm going to train you in, that you can develop what I call reflex action. You can look at it, as Malcolm Gladwell said in his book Blink, you can see it in a blink of an eye and you know exactly what to do. Otherwise, you're going to make mistakes. That is, the more decisions you have to make. And by the way, the theory of ego depletion is that the later in the day, or as you become more tired, the more likely you are with ego depletion to make mistakes. So let's just quickly go back to the chart. So what we could see here, trading with the trend traders, there are that many trades. Trading with the trend, it can keep you very busy, but the challenge is sometimes you're going to be waiting and sitting around for maybe an hour, and that is where traders get anxious. Well, that is really the trick in our business, is that patience, developing the discipline. Traders, I hope today's session was useful, and please subscribe to my YouTube channel, and over the next few weeks I will post up a complete training session, 15 minutes each, of every one of my trading setups. Thank you.